This is the Asia Trade live from the Bloomberg New Economy Forum in Singapore. I'm Shery.
And I'm Avril. Here are your top stories this hour. A weak lead-in for Asian markets with a tech sell-off driving U.S. stocks to a fourth session of losses. Nvidia slipping ahead of its third quarter results as Wall Street worries about a potential AI bubble. But the big deals in the sector keep coming. Nvidia and Microsoft to invest up to $15 billion in Anthropic, which in turn will spend $30 billion on Microsoft computing capacity. And President Trump's grip on Washington shows signs of weakening as the Senate reaches a deal to release the Epstein files after near unanimous House support.
Welcome to the Bloomberg New Economy Forum 2025, thriving in an age of extremes. Of course, we have seen U.S. tariffs at the highest levels since the 1940s, at a time when we also have the ongoing U.S.-China tech rivalry. And of course, right now, the focus and the hottest topic, artificial intelligence.
And the gap is being fast closed by the Chinese side. But there are these lingering questions. Is there only one form of AI leadership? And what does the AI future look like? As you talked about tariffs, it's also this backdrop of, is it too soon, about 10 months into the presidency, to tell how the Trump policies are actually reshaping the global trading order? Is it really beneficial to the U.S. in terms of this pecking order?
The America First policy and what that means for the rest of the world, right? At a time when we continue to see also these concerns about artificial intelligence and perhaps a bull case when it comes to these investments into AI infrastructure starting to weaken and frazzle a little bit.
And whether the U.S. leadership can actually risk alienating in a way this region that is coming at the time of the Asian century. That's among the key conversations that we're having at this event.
All of those conversations with the guests that you see on your screen, of course, very high profile conversations that we'll have to sort of get the pulse of where we're at right now, the new normal, the realignment of the global economy. Take a look at how we're setting up for the market session today across Asia, because we have seen, of course, a global sell-off, whether it's stocks to Bitcoin, the S&P 500, the longest slump since August. And we have seen the Japanese yen, the weakening, which is really surprising, isn't it, Avril? Because you would think in a risk-off environment, you would actually see the yen strengthening, but it's actually past the 155 level per dollar. Sell Japan trade now emerging. So do look out for the 40-year yield. Also in Japan, JGBs, the sell-off continuing, the 40-year yield at record highs. Public finance is a key issue. And of course, right now, the offshore yuan holding at that 7-11 level.
Yeah, you talk about sell Japan as this fiscal worries that continue to linger, along with these diplomatic spats, right, with the Chinese in particular. You talk about the selling when it comes to stocks. The S&P 500 is on its longest losing streak since August. And if this continues, it could be the worst November since the GFC. So some bit of size and scope for you on just how much we're seeing a bleed in stocks. And against the backdrop of these circular deals that we're seeing from these tech giants into these AI companies, developers, the concern, of course, whether they are indeed delivering, even as we see this build out of infrastructure. When it comes to the selling, look at how Bitcoin is faring, because that has been a key gauge of how the market may be capitulating to the selling pressure. We are just hovering above the 93,000 level on the world's largest cryptocurrency. And another gauge, I guess, for the risk off is when you look at the 10-year, if it approaches even further, the 4% handle, that's when I think some investors are watching to see the extent of the risk off. And of course, Shery, you talked about this, right? Whether the Asia stocks, equities, do they have a bit of a better shot at riding out this? Because futures are suggesting some pockets of resilience in the Asian markets amid the sell-off. And this is with valuations in focus. You look at the PE ratios, right? They indicate that Asian stocks have greater valuation support compared to their US peers. So let's get some analysis on that.
Yeah, with our Asia Markets Executive Editor Paul Dobson and our tech correspondent Annabelle Drewlers. Paul, let me start with you because, of course, we're ahead of Nvidia earnings. We're also ahead of the US September employment report as well. But at the same time, are we thinking Is this enough? Is this a convincing case to continue putting the billions and billions of dollars into AI infrastructure right now? And it seems that investors are getting anxious.
Hi, good morning, Shery. It's going to be a great day today. Looking forward to it. But we still have to contend with all of the market volatility that we've got going on in the traded world. And so I think that one of those question marks over the investment case for AI is very salient right now in the build-up to the Nvidia results. As Avril was saying, you know, so far this month is looking nasty, going the wrong way compared to what we usually do in the run-up to Nvidia earnings. But maybe that might be a helpful kind of counterpoint or counterfactual for the markets if we do get a beat on the earnings, which we're kind of used to these days from Nvidia. If we do get some more good news, you know, we have more investment plans announced overnight, then maybe the market takes a little bit of comfort in this. I think that the AI investment case, everybody knows there's a huge amount of spending required. Probably most people know that not everybody can be a winner in this, but the hyperscalers in particular know that in order to be in the race, in order to buy that ticket to enter the race, they have to stump up the money now. And so this is where we're at. You know, maybe not everybody comes out of it as well as they'd like. It's competitive and it's rapid and it's exciting, but at the same time it's costly, and there are qualms about it and there are risks about it, and we're starting to see that reflected not only in the share performance but also in the performance of the people that have been lending the money and in the corporate bond space and in people seeking debt protection as well. So there is that anxiety out there. There's a lot to be settled, and we'll see what Nvidia and Jensen Huang have to say about it at the end of the day today.
Yeah, you do wonder if the sell-off in stocks is creating a higher bar for Nvidia earnings. But Belle, let's bring you in here, because when it comes to this idea of risk and circular deals, we are seeing yet another day, yet another cloud chip giant plowing money into an AI developer.
Yeah, that's exactly it. I mean, amidst all of these concerns of these so-called circular deals, yet another one lands on our desk this morning. But yes, the latest one here is that Microsoft and Nvidia are going to be pouring money into Anthropic. So Anthropic is actually a company that was founded back in 2021, but by former employees of OpenAI. It is a smaller version of OpenAI, but still it has been getting a lot of traction, especially with enterprise customers. So Anthropic, they're going to be getting a combined funding of $15 billion from these companies. It's really that sort of theme that we're seeing here, as you said. You've got the cloud computing, the chip providers, rather, that continue to pour cash into these AI startups and into these AI foundation models. And then that, in turn, they spend that money back on those services, because I heard you mention at the top of the show, yes, Anthropic is also committed to spending $30 billion on cloud power or compute power from Microsoft. So again, just another circular deal we're seeing here, but one that certainly seems to have been in the works for quite a period.
Annabelle, not surprising given perhaps the fading in conviction when it comes to the bull case for generative AI. We are seeing some downgrades for Microsoft and Amazon.
Yeah, this was a really interesting one and quite a rare one as well that came from Redbush. So essentially, we have the analyst there. This is Alexander Hazel, who downgraded both of these stocks from buy to neutral overnight. And his justification is twofold. Firstly, he's saying that the bull case for generative AI is no longer clear. And secondly, he's saying that you should be approaching hyperscalers with caution. So he's obviously wary about just that sheer amount of spending. And he's saying that the underlying economics of this is actually far weaker than can be assumed. So we did actually see a market reaction to this, because you saw Microsoft, but particularly Amazon, under pressure in the session. Of course, he's really breaking ranks with most of his peers, because 90% plus of the analysts that cover these stocks still do have a buy equivalent rating on them. But again, something that sent some waves through the markets. And you can see here again the share of all recommendations that are buy. It's extremely high. Microsoft, 97%.
Yeah, they are a bit of an outlier. Paul, wanted to ask you, when it comes to Asia versus what we're seeing in the US, this extreme bout of selling, do you see some form of support for Asia stocks coming from valuations and PE ratios?
There are certainly things that are going for Asia that make it look a little bit more appealing than the US. I think today's markets will be really interesting to watch. I don't think that where we are right now is any worse than where we were when we went home in the Asia day yesterday, i.e. I don't think the US was any worse a trading session than we were already expecting and priced in, and it does look like Bitcoin's found a little bit of a floor, so that may give us some support anyway for today. I think longer term, one of the concerns for the US market is just how good the Chinese technology is now, and that competitive kind of nature about the cheaper models of AI that China is offering, and that can benefit Asia maybe in an outsized way, but a lot of the US companies seem to be turning and using that as well in their AI rollout and development. So yes, there's a little bit of competition. Yes, there are things that are favoring Asia, and just on a pure tech argument, yes, valuations help, but we've also seen a lot of froth in our markets, right? The Kospi in particular, South Korean stocks have been absolutely on a tear this year, and probably, charged by some risky borrowing and those kinds of things. Japan also has its own problems on top of that. So we have reasons to be careful as well.
Our Asia Markets Executive Editor Paul Dobson there, and our tech correspondent Annabelle Drewlers with the setup for the Asia Market session today. Thank you. Still ahead on the Asia Trade.
Atlas Merchant Capital CEO Bob Diamond joins us here at the Bloomberg New Economy Forum to discuss fintech and credit markets. And later, we speak to the CEO of a company that helped train OpenAI's ChatGPT. Much more ahead. This is Bloomberg. Now, the U.S. Senate could vote as soon as today to back the Justice Department release of files on sex trafficker Jeffrey Epstein, whose ties to President Trump are under scrutiny. And this follows an almost unanimous House vote backing the bill, signaling Trump's hold on the Republican Party may be weakening. So let's bring in our Washington correspondent, Tyler Kendall, and she joins us from the White House. So, Tyler, we're seeing the Senate reaching this deal to clear the House-passed Epstein files bill. What is next, and how much pressure is the Trump administration under?
Yeah, hey, good evening. Well, at this point, the Senate has teed up what's known as unanimous consent. We're still waiting for the actual text of the bill to make its way from the House to the upper chamber. But essentially what this means is that senators are expediting the approval here. They're not going to have to take a roll call vote that would put them on the record. Instead, as a group, they're saying that they're going to approve this legislation as it stands. That means that it next goes to President Trump's desk. And in a stunning reversal over the weekend, we heard from the president that he does intend to sign this bill. He has often said, and in fact, in the last hour, put out a post on Truth Social indicating that he just wants Republicans to move on from this, and that he thinks that it is distracting from some of the recent wins that the party was able to secure, including reopening the government just last week. But it is that reopening of the government that has paved the way to this vote. Now, this vote includes allowing the DOJ to release a whole slew of documents, everything from travel records to flight logs to any sort of immunity ruling. So, but it doesn't necessarily mean that it's all going to get released very quickly.
And Tyler, President Trump also facing questions about his knowledge when it comes to the murder of the Washington Post columnist Jamal Khashoggi. Take a listen to what the Crown Prince of Saudi Arabia had to say.
For the Crown Prince, Your Royal Highness, you're talking about $1 trillion of investment. Could the kingdom continue to do that with oil prices in the mid-60s?
We're going to spend in the short term around $50 billion by consuming those semiconductors for our needs in Saudi Arabia. And with the agreement that we're going to have with North America, that will allow us to focus that consuming power.
What does this mean for President Trump and also U.S.-Saudi relations?
Right, exactly. Well, as you heard, President Trump suggested that the Saudi Crown Prince did not know about this killing. We should say that a U.S. intelligence report did implicate that the Crown Prince had knowledge of this killing, which happened in a Saudi consulate in Turkey. But we are really seeing a stark reversal when it comes to U.S.-Saudi Arabia relations. This is the Crown Prince's first trip here to the U.S. in the last 7 years, and it comes with a slew of deals that we saw the White House announce tonight, including on critical minerals and also a defense pact, which which importantly will pave the way for Saudi Arabia to secure critical F-35 fighter jets, though we should say that might not happen immediately and could face some pushback and delays by the U.S. Congress. The other key part of this is that we saw the two countries sign a memorandum when it comes to artificial intelligence. And we had a Bloomberg News scoop out earlier today from our colleague Mackenzie Hawkins that confirms that the U.S. is preparing to greenlight some of those export licenses related to critical chip and semiconductors that we know that Saudi Arabia has been keen to get. I will say that going into today, we know that there were still two outstanding issues. One, what those security conditions are going to look like amid U.S. concerns that the technology could fall into China's possession. And then second, what specific reciprocal investment commitments Saudi Arabia would make in the United States in exchange for access to these processors. We're still waiting on those details, but it does seem like they're heading in the right direction to getting a green light for those export licenses.
Our Bloomberg Washington correspondent Tyler Kendall there with the latest from the White House. Thank you. And we do have breaking news at the moment. We're hearing from Secretary Scott Bessent speaking to media, saying that he can safely say that he will not be Fed chair. Of course, we've had questions about who replaces Chair Powell next year when we have this change in the FOMC composition. Secretary Bessent also saying that hopefully they'll have a Fed chair answer before Christmas, and that President Trump will meet 3 Fed candidates post-Thanksgiving.
Yeah, on top of that, we are also watching out for one of the top stories we've been tracking this past couple of days, that diplomatic spat between Japan and China. And Japan is saying that this increasing diplomatic efforts to smooth over relations with Beijing amid the spat over Taiwan, raising fears of this breakdown in economic ties.
Yeah, big diplomatic story unfolding here in Northeast Asia. Let's bring in our chief North Asia correspondent, Stephen Engel, with the latest. So, Steve, what's being done right now to dial down tensions?
Yeah, maybe the question is what can be done, because, again, these kind of disputes tend to be drawn out because both sides, let's be very honest about this, right now they both are either milking it or stirring it as well because, again, look, Takeichi-san in Japan has, in some surveys, upwards of 80% approval ratings, and she campaigned on a nationalistic theme, and so she doesn't want to be seen as backing down, and Beijing, they have a history of these kind of issues with Japan when sensitive topics come up. And I was living in Beijing in 2012 when a similar situation came, and it took several months for cooler temperatures and cooler heads to prevail. So this might be drawn out over time. The questions are, does it get violent? Does it cause significant economic pain? And we're already starting to see some signs. But again, so far, the cancellations, and we'll talk about that in just a bit, about the tour groups, have been fairly muted. But again, there's not a lot of successes right now because the Ministry of Foreign Affairs from both nations did have their top representatives meet, and the assessment, according to one media, the paper, saying Liu Jinsong was dissatisfied with the talks with his Japanese counterpart.
Steve, so what has been the economic or early signs of this commercial impact?
Well, keep in mind that 1 in 4 of the tourists that have arrived in Japan this year are from mainland China. It's definitely seen a significant increase. But also, along with that, say in 2015, about 43% of those Chinese visitors were booked through tour groups. Now it's down to less than 12%. Individual travel and booked online and on mobile phones has really mushroomed. So they're less swayed by the government campaigns to canceled tour group bookings. We have seen at least 2 state-owned tour agencies cancel group tours to Japan, to places like you're seeing on the screen now. Niseko, as the winter ski season and snowboarding season is about to kick off up in northern Hokkaido. And so many mainland Chinese are now going there every year to ski and to snowboard. So that's going to be a good barometer to see how many of those tour groups and those tourists actually cancel their pretty expensive tour groups are at vacations to Niseko as the season really begins in earnest on November 29th as ski lifts begin operation there. So again, there have been cancellations. The Imperial Hotel Group seeing cancellations or postponement of corporate events and stays. Also, the Kintetsu Group seeing cancellation at hotels, but it's not sizable yet. But this is going to be a good barometer, as I said. December in Niseko, packed with mainland Chinese, usually.
Usually. We'll see what this holiday season looks like. Really interesting, this diplomatic spat that's brewing ahead of the peak travel season.
Yeah.
Stephen, thank you so much. Our Chief North Asia correspondent, Stephen Angle. Now, a reminder of our conversations coming up from the first day of the Bloomberg New Economy Forum here in Singapore.
Atlas Merchant CEO Bob Diamond joining us later this hour. Do stick around. This is Bloomberg. The top stories that we're following: China has made its biggest daily purchase of U.S. soybeans in 2 years, ending a pause and signaling support for last month's trade truce. The USDA says Beijing bought 792,000 tons on Tuesday, taking total purchases since October above 1 million tons. President Trump says he still wants China to speed up its buying, even as U.S. soybean trade at a premium to Brazil's crop.
Meantime, Mexican President Claudia Sheinbaum is ruling out any U.S. military intervention, pushing back on President Trump's suggestion that he might deploy troops to fight drug smuggling. Sheinbaum says Mexico will share intelligence but won't request foreign intervention. Trump's comments hit the peso after he said he may widen strikes on alleged drug trafficking vessels in the Caribbean and the Pacific. Now, let's also take a look at how FX is faring. The crosses we are watching really involve the Japanese yen, these fiscal worries. Don't forget, today we have a 20-year auction as well,
right,
at a time when this diplomatic spat is brewing and is putting pressure on the Japanese yen. And we are seeing, of course, the concerns that will this spat actually allow still the Japanese tourism industry to capitalize on the weak currency.
Yeah, I mean, those tourists coming in really buying at cheaper prices compared, given the fact that their cash goes longer right now. But those pairs that you were looking at, the Japanese yen, of course, we're talking at lows that we haven't seen since January against the dollar, but against the euro, touching 180 for the first time ever. So do watch out for those at a time, which is surprising. When we continue to see this risk-off sentiment and a global sell-off, the fact that the Japanese yen continues to weaken is key.
Yeah, and we are watching as well what the Asian session is going to look like. We are seeing these steep declines in Asia, in the US, but futures may be pointing to a bit more resilience in Asia. The idea that we are seeing a bit of support in terms of valuation for Asia stocks. Now, we are also a reminder of some of the big names that will be speaking today here at the Bloomberg New Economy Forum. International business, political leaders really seeking solutions to these challenges facing global prosperity. A lot of interesting conversations coming right up right here at the event. Stay tuned for that, our exclusive live coverage. We have more ahead on the Asia trade. This is Bloomberg.
We're at the Bloomberg New Economy Forum 2025, thriving in an age of extremes. And Avril, one of the key conversations this time around will be around the digital divide, artificial intelligence, the AI haves and have-nots. And of course, right now we continue to see that build out in AI infrastructure. A lot of hyperscalers continuing to invest in this sector. Will it pay off is a key question at a time when, of course, there are also questions about sustainability. This will take enormous amounts of energy.
Yeah, and whether it's time to bring in a more concerted effort to the likes of nuclear to support some of this AI data center energy demand. So let's also take stock, because if you think about it, the COP30 climate talks in Brazil, they're entering their final stretch, right? So dozens of these countries, they've been pushing for the summit to deliver a roadmap away from fossil fuel use as its key outcome. So that's setting the stage for this frantic last few days of talks. Shery.
Bloomberg NEF's head of Asia Pacific, Ali Izadi, joining us now. Ali, so what is BNEF's assessment of progress at COP30 so far?
Thank you very much for having me. So going into COP, we were expecting progress at a level of scoring of 4.1 out of 10. So not a huge optimism, but still we were expecting some progress on some of the key areas. Now that we are more than halfway through, we've actually had to lower our assessments of COP30. We are now giving it only a score of 3.4 out of 10. The main reason for that is countries this year were expected to submit their 2035 emission reduction targets, and so far the number of countries that have submitted these targets falls far short of what's necessary. We were hoping that at least 75% of global emissions would be covered by these targets, but right now we are about 60%.
That also turns the attention on China, a large emitter. What is your view of China's 2035 emission target? Where does this leave the other major emitters in the region?
So let's start with a positive note. China is actually one of the countries that did submit a formal target, and this time around it has submitted an absolute emission reduction target, unlike the previous rounds where its targets were emission intensity basis. China's target is a reduction of 7 to 10% relative to peak emissions by 2035. If you look at comparing that with our economic transition scenario, which just looks at how much emissions would decline if we let economics play out, we expect actually China will probably do a lot better than its target currently suggests. We expected that it will probably achieve about 37% emission reduction by 2035. If you look at other major emitters across APAC, Indonesia's target is somewhat similar to China in a sense that this time around, on a positive note, they did submit an absolute reduction target, but their target is quite modest and we still expect them to do a lot better. On the other side of it, we have countries such as Japan, South Korea, and Australia that have submitted targets that are fairly close to what our Paris-aligned net zero scenario suggests is required. At the same time, they're very, very far from the trajectory required to meet those targets. And then after China, the second largest emitter in the region is India, and India so far has not submitted its target.
So then realistically, how much progress should we be expecting by Friday when COP30 wraps up?
Yeah, so unfortunately only very few days left, and if you look at the latest that's coming out of the negotiations, we have concerns that some of the expectations around progress, for example, for a concrete roadmap for the finance goals, as well as progress on Article 6 institutionalization, those we are now less optimistic that they will make progress. And then there are already debates around the language of the final communique, whether it will reference again, for example, the tripling of renewables by 2030 goal, whether it will include the new sustainable fuels goal, and also the wording exactly around phase out of fossil fuels.
Bloomberg NEF head of APAC research, Ali Izadi there. And coming up next on the Bloomberg New Economy Forum, we'll get the outlook for financial services amid the AI revolution with Atlas Merchant CEO Bob Diamond joining us here. This is Bloomberg.
Now, Shery, we've really been tracking this risk-off in markets, and the victim of this falling prey has really been crypto. We've seen how Bitcoin, the largest crypto, of course, we've seen it above the 100K level. Look at where it's sitting now. Is this a sign of capitulation at a time where we are seeing these ETFs starting to trade, right? But they don't seem to be benefiting from that. This is tricky timing for them. But also look at the other cryptocurrencies commodities, including Ether. And this is supposed to be a relatively good year for cryptos, right? You think about the regulatory backdrop, Wall Street support, some of this institutional investment that's come in as well, Shery.
Yeah, so it's very surprising to see Bitcoin really plunging towards a $90,000 level, at one point falling below it for the first time in 7 months. Let's bring in MLive strategist Brendan Fagan. Brendan, so tell us a little bit about what's going on right now in the crypto space, because we're trying to find feasible explanations of why the sell-off continues.
Well, I think part of it has to do with what's going on broadly in risk markets. You're kind of in no man's land here in equities and cross-asset. You know, there are concerns in the front end of the bond market here in the United States, whether it's the funding markets, whether it's concerns about Fed policy. So that's just bleeding through across the spectrum. Also, we have the be-all and end-all tomorrow, which is Nvidia earnings. So there is a little bit of concern. We've seen a little bit of degrossing across the equity space, and that's been bleeding. And we touched on it a little bit on the MLive blog, which was just that Bitcoin seemed to be leading risk over the past week or so. Bitcoin was trading pretty weak. That was bleeding through into the altcoins, also into Ethereum. And now we've seen the rollover cross-asset, the bid into treasuries. So it kind of started into crypto. We actually flagged today, too, that there was a bit of an intraday bid. So that little pickup saw us bid a bit off the lows today in equities. But I think there's a little bit of, I think people are a little bit scared with what's going on, like I said, with the bond market and also with the Fed meeting coming up.
Yeah, there's still that uncertainty of what December might hold with that repricing underway, lower bets of a Fed cut next month. But when it comes to what this means for broader risk as we head into a crucial stretch, what are you watching?
Well, funny enough, watching crypto, it seems to be the tell at the moment. It's kind of the fast money within risk markets. You think of it as the more speculative area. I sort of look at it as a levered play almost on tech stocks. It gives you the high beta that you're looking for, but it can also give you these very strong drawdowns. We've seen Bitcoin about 30% off the highs. So it has been a tell. That's one thing I'm looking at. But generally, things aren't that bad. This seems just like a little bit of a slight wobble here going into a very important event tomorrow. Like I said, with Nvidia, it is such an important part of the tape. Everybody flags concentration risk, how big Nvidia is within the indices. So generally, crypto's been a tell, but the big thing to watch will be the guide tomorrow. I think it plays such a big part in the broader equity tape. So that's really what I'm looking at. And if it bleeds through into assets like it has been over the past week, then we'll probably know more after tomorrow.
MLive strategist Brendan Fagan there joining us from New York with the latest on the crypto space. Let's actually get more on this sector and just a broader digital landscape as well in fintech markets. Joining us here at the Bloomberg New Economy Forum is Bob Diamond, founding partner and CEO at Atlas Merchant Capital. Bob, great to have you with us.
So nice to be here. Thank you for the invite.
Especially on a day like today with the volatility in the crypto space. And I know that you made a very bullish deal around Hyperlink in the summer. Does this give you some pause?
Not really. I mean, I think what we're seeing across the world, I couldn't hear your guests there, but I hope I don't repeat. But I think we're repricing risk in a way. It's equities, it's AI, it's Bitcoin, it's really across the piece. So I don't think this is specifically about crypto or digital assets. I think for us, what's really interesting is we're a big investor in Hype, the native token of Hyperliquid. Hyperliquid, as you know, is developed right here in Singapore by Jeff Yan and his team, and it's a decentralized, non-custodian exchange. And its native token, Hype, over the last 7 days is up a bit, where Bitcoin and most of the other tokens are down. But I would say that's rare. It's unusual. Really, across the piece, we've seen risk assets be repriced. In my sense, this is a healthy correction, not something that's turning into a bear market. So I think for many reasons. I was just at the GIC Insights over the last day. Anybody associated with GIC, appreciates who they bring together once a year to talk about these trends. And, one of the things we were talking about there was the big numbers in AI. I mean, the billions here, trillions there, billions here, data centers. And I think most people have a hard time really processing it. And that doesn't really work against the fact that we can be really, really positive on AI over the next 5 to 10 years and the impact it's going to have.
But the big numbers are scary,
They're
especially
big.
at a time when they continue to invest in sort of each other,
all
right?
Over the place. Yeah.
And these concerns about a circular deal, about whether
Yep.
this is just a bubble.
Yeah.
So you don't buy into that. Will there be demand down the line?
What I feel comfortable in is taking a 2, 3, 5-year view of the impact of AI. I think it will be a real positive in dampening inflation. I think it's going to be incredibly important in terms of productivity in the global economy. And I think some people are confused right now over the valuations. And many people say this. They look back, to the internet bubble in 2000, right? It had a real bubble because there was some fringe equities that probably weren't legitimate as much as kind of the core. But nothing stopped the development of the internet over the next 10, 15, 20 years. And I think the consensus over the last day has been where really we, the group, are very, very positive on what AI can bring in terms of productivity, dampening inflation, global growth, really comfortable. So I think this is a correction in risk assets across the piece. And I think, AI, partly because there's so many big numbers out there, that people really don't understand yet, and particularly around data centers.
Yeah, I think it's hard to decipher. And to your point about the internet economy, it was also about sifting out the froth at that stage early on in the game. When it comes to digital assets, you look at tokenization, as you highlighted earlier, as a key driver. How are you viewing, say, stable coins and how that might be shaping the financial system?
Well, that's the other big investment we made at Atlas Merchant Capital. We're an early investor in Circle in 2021. We've worked with Jeremy Allaire and his team very closely over the years. They have a tremendous relationship here in Singapore with the Monetary Authority of Singapore and the developments that they've had. And I think we've learned so much about the impact of blockchain in terms of, we believe, will be a real source of the underlying foundation of financial services over the next 2, 3, 5 years. Stablecoins are really here to stay. And I think the acceptance of Circle as the most regulated, the most conservative, really has reserves behind it that are managed by BlackRock, as you know. So I think the best of the best in stablecoins is Circle, highly regulated. They want to be highly regulated. They want to be an OCC bank in the U.S. So I think the developments there are very strong. And I think what we've seen this year is a sea change in the U.S. in terms of tailwinds. With this administration, with Scott Bessent in the Treasury, with Paul Atkins in the SEC, with Jay Clayton, this team is so highly respected and so supportive of regulation that covers both digital assets and financial services, not two separate regulatory.
What else in your mind in terms of deliverables left to go on these regulatory guardrails for the environment?
Well, I think the most important thing from my point of view as we look at stablecoins is the increase in institutional use. A move from crypto traders using stablecoins and using digital currencies to treasurers, to Visa and MasterCard, to the big banks like JP Morgan and B of A developing it. We're certainly seeing in the Middle East with some of the best banks in Abu Dhabi and Dubai already developing use cases for blockchain and stablecoin, particularly dollar stablecoins, particularly USDC.
So I know that you talked about perhaps the U.S. regional banks and the consolidation in that sector, right? What scares me right now is all the froth, not only in the crypto space, but of course we talked about tech and the buildup around artificial intelligence. Where do you go to hide when you could potentially see, as Jamie Dimon said, cockroaches, one means more, and you've seen even around banks in the U.S. where you had isolated incidents with Tricolor or First Brand. So is there a hedging mechanism at the moment?
Well, I think there's two different questions there. In terms of the comment on cockroaches, I mean, I think it was a statement of credit.
Credit.
And if we're being very, very honest with ourselves, we had 12 years of zero interest rates after the great financial crisis in 2008. Then we had a steep increase from 0 to 5.5%. I would have thought back then we would have seen cracks in credit because it was such a long period of credit was really very, very available. And I think today it would be unsurprising to me, given how tight credit spreads are, that we see some correction in credit spreads.
To be fair, a lot of people say that credit spreads are tight right now because they're not really thinking about the fiscal risk that's already baked in, because you can't even really count on sovereigns at the moment with their building debt load that they're actually safe.
Well, you have, I think, Shery, what you just brought up is the darkest cloud overhanging the markets, which are the debt levels. You know, we're talking about the credit markets, but what you're referring to now is sovereign credit, and in particular from the U.S. and the much higher debt levels. And that is the dark cloud hanging over the market for sure.
What about PE? How are you approaching fundraising going into next year?
You know, with all this volatility, it makes what we do in private equity even more sustainable. And I think when you look at, you know, the correction in equities, for example, in the U.S., it's primarily around those 7 or 8 or 9 equities in tech that have really been leading the rally. You move from that to the smaller companies in the index, and then you move from that to the private companies. We're seeing very, very good opportunities in private equity. We focus on financial services. We do a lot in the U.S. One of the things that we see as a terrific opportunity is consolidation in regional and community banks. Their ability to pull costs out, to create cost synergies almost immediately with consolidation. I mean, particularly here, when I mention to people that there's 4,500 banks in the U.S., they usually look at me like, what?
Yeah.
And you see
the United States has 4,500 banks, and they're really good. And as Scott Bessent, the Secretary of the Treasury, has pointed out many times, about half of the lending to small businesses in the U.S. come from regional and community banks, not from kind of the big four. So there are a lot of great opportunities out there in private markets.
Well, Diamond, really good to have you with us. Thanks for finishing the conversation on an upbeat note here at the New Economy Forum. 2025 is the founding partner and CEO at Atlas Merchant Capital. We'll be back with more. This is Bloomberg. We have breaking news out of Japan. We are getting the core machine orders, a gain of 11.6% year on year, which is much higher than expectations by economists. When it comes to the month-on-month numbers, also surprising to the upside, gains of 4.2%, really giving you an indication of where capex spending is headed in Japan, despite the fact, Avril, that we continue to see a little bit of anxiety when it comes to the markets.
Yeah, and I think we'll see if that feeds through into trading today. I mean, does this give us a bit more optimism that the Japanese economy is looking a bit resilient as far as core machine orders or capex are concerned? Investors will be closely watching how markets open in Japan in the next few minutes, with Tuesday's extension of losses in stocks and government bonds, whether that continues. All this coming with this diplomatic dispute with China and these fiscal health concerns also looming large.
Let's bring in our Japan stocks reporter, Alice French. Alice, for the longest time, I've been talking to you about this optimism about the bull market in Japan, especially with corporate governance reforms. And all of a sudden, we have the Sell Japan trade in place. Tell us a little bit about what's happening.
Morning. Yeah, I mean, as you say, let's see how things play out today. I think we may see a little bit of a rebound, a little bit of dip buying. But yeah, I mean, the tide has really turned, it feels like, this week in Japan. You know, we saw the Nikkei down over 3% yesterday. That's the biggest drop that it's seen since April, around the sort of jitters that we had around Trump's tariffs initially, right? So it does kind of seem like that optimism that we had seen, of course, largely driven by hopes for more government spending and that stimulus from the new Prime Minister Takaichi. It does seem like that's kind of just transformed into caution. So we know we're expecting her to unveil her sort of economic stimulus package as soon as tomorrow. It does seem like there's a lot of concerns over sort of how much her big spending plans might weigh on fiscal health in Japan. Of course, in the background, we also have this ongoing spat with China as well, which is, not helping sort of sentiment around geopolitical risk. And, I think that's really playing out in the bond market. Especially we saw 40-year bond yields up at their highest since 2007 yesterday. So we can see a lot of caution, a lot of kind of risk pullback happening. And of course, this is in the context of sort of a broader move away from risky assets and some kind of profit taking in those tech shares. But it does seem like specifically in Japan, those sort of political and geopolitical factors really, really weighing on the mood here.
Yeah, Alice, we were just talking as well about sovereign debt levels, this dark cloud hanging over economies and markets with Bob Diamond. I mean, when it comes to fiscal worries in Japan, how are we approaching Takaichi's new economic package? How might that be received by markets?
Yeah, it's interesting, right? I think to some extent this week we're seeing a bit of a reassessment by investors of Takaichi's approach to her fiscal spending. So we know, in the weeks after she became prime minister, there was quite a lot of optimism and excitement around this Takaichi trade and how her plans would be driving economic growth. But I think now it's kind of like a reality check. A lot of investors are thinking, actually, this could really, really contribute to, Japan's already very heavy government debt burden. We know that some lawmakers have called for Takaichi to launch a package of 25 trillion yen, which is considerably higher than what we'd seen last year and previously. And I think, particularly the bond markets are starting to price in that risk. And of course, this is something that's happening the world over. We know there's also jitters around the UK budget at the moment. And I think it's all just kind of feeding through here. And the JGB market is really getting hit by that. And it is feeding through into stocks. It's feeding through into the yen. The yen is still down around 155 to the dollar at, its lowest level in months. And I think overall the caution is really felt cross-asset wide.
Yeah, I mean, the yen has really bounced lower this year. That recovery that we've been waiting for is just not here quite yet, but perhaps providing that bit of support for Japanese stocks. Thanks so much, Alice French, our Japan stocks reporter. And of course, Shery, take a quick look at how futures are shaping up as we set up for the start of trade in Japan and South Korea. The markets there open next. This is Bloomberg.
This is the Asia Trade. Welcome to the Bloomberg New Economy Forum in Singapore. We're counting down to Asia's major market opens, of course, at a time when we're thriving in an age of extremes. Avril, this is the topic of this year's Bloomberg New Economy Forum. Of course, we do have the trade tensions ongoing, the tariffs at the highest in the U.S. since the 1940s, and at the same time, this incredible exuberance over artificial intelligence.
Yeah, and I guess to your point, Asian economies do have a knack for turning crisis into opportunity. So that's something I think that's going to be shaping some of the conversations here at the event. But it is coming in an interesting week because we have those two big market moving events potentially, right, in the form of Nvidia earnings as well as the September jobs report that could shape markets for the rest of the year. What are we seeing on stocks and the rest of the markets in the Asia Pacific today, Shery?
Take a look at how the Nikkei is coming online, upside of 0.25% after losses, of course, in the previous session. This, as we continue to see that global sell-off and the anxiety over whether or not all of that investment into artificial intelligence will eventually pay off. What's interesting to me is the weakness of the Japanese yen past that 155 level against the US dollar, despite the fact that we're seeing that risk-off sentiment, and usually you would see some safe haven moves into the Japanese currency, but not surprising perhaps given the concerns around fiscal spending in Japan. Long end JGBs, that sell-off continuing, the 40 30-year yield at the highest on record, as we're expecting the supplementary budget to come out of Japan anytime now. But take a look at how South Korea is coming online. We talked about that tech sell-off and the concerns around artificial intelligence investments, seeing a little bit of upside, 0.2%.
Yeah, after the steep selling we've been seeing in the past week among Asia stocks tracking those declines in the US, perhaps unsurprising that we're seeing that catching a bit of a breather. And this is something that we've been talking about this morning, right? Because of the valuation support, relatively less expensive than the US counterparts. Does this give Asian equities a better shot at resilience or a rebound? Take a look at how we are starting up in the US Treasuries. Of course, we have been seeing the bonds rallying, Treasuries climbing, and we are seeing a bit of reversal for the moment. 411 thereabouts is still where we're seeing the US 10-year yield. The stock futures are pointing flat, but of course, a gauge of risk appetite of late has really been the moves we've been seeing in cryptocurrencies. 92, 93K is where we are seeing Bitcoin. Let's get more with our Asia Markets Executive Editor, Paul Dobson. So early goings, it looks like a slight bounce that we're seeing in Asia stocks. What do you make of all this, Paul?
Yeah, good morning, Avril. Not really surprising to see a slight stabilization, at least in Asia's markets, because I don't think that the US session told us anything we didn't already know when we went home this time yesterday. In fact, there was a little bit of stabilization in Bitcoin, in particular overnight, which had driven some of the weakness in our markets in the previous session. I do think that this is a fragile kind of stabilization at the moment, and sentiment is very weak after the bruising that we've had in recent sessions and quite a lot of volatility as well. But it is reassuring to see Korea and Japan stabilizing, since those ones have been some of the more favored by the retail crowd and the international investors that have been more flighty as volatility has whipped up. So hopefully for the bulls at least, this bodes well for a more calm session after all of the volatility that we saw over the past 24 hours.
I mean, Paul, how long will that last? We do have Nvidia earnings, not to mention the U.S. September jobs report.
Yeah, so two crucially important events coming at the end of the US day. Again, a reason actually probably why Asia will be relatively quiet, just because we'll be waiting to see what we get from that. The setup for Nvidia is quite the opposite of what we usually have, where we usually rally into those earnings, even with lofty expectations. Oftentimes, they manage to even surpass those expectations, and the market thinks this is very nice and then has a little bit of a sell-off as people take profit. And then, obviously, the trend that we've seen is it roars back again and again. This time, though, we're down in a November, which is unusual, headed into the earnings. So perhaps just maybe they've got an opportunity to surprise to the upside, and the market might like it and applaud it rather than the other way around. We'll have to wait and see what we get, of course, this time tomorrow.
Paul, arguably what caused a bit of a rethink with these AI-related stocks, including Nvidia, was SoftBank disclosing how it sold that stake in the chip giant. I mean, we are seeing in the early going SoftBank, I think, down a fair bit. It has been bearing the brunt of the sell-off in Asia markets. And then you have the sell Japan trade. How is that going to shake out, you think?
Really interesting extra layer on top of everything. This idea of the sell Japan trade, where we have the new Prime Minister Takaichi sort of at the mercy of markets to a certain extent. We know that Japan would like to spend more. We know that her administration would like to spend more to boost the economy, to help people manage the inflation that's in the economy at the moment, and to push back BOJ hikes as a result. But what we're seeing as a result is that the yen has been weakening, the bond market in particular is under pressure, and the equities market is also not faring all that well at the moment, not taking too much heart from it all. And the bond market is going to be under more pressure today because there's an auction of 20-year government bonds as well. So lots of pressure and tension there. We're not hearing clearly from the administration exactly what it intends to do, but we did hear from the BOJ after a meeting with Takaichi that it's still on this path towards rate hikes. So that may offer a bit of stability for the yen, which really is kind of the crucial point here for all of Japan's markets and tying everything together.
Asia Markets Executive Editor Paul Dobson there. As the markets are also contending with diplomatic news, Japan now saying that its increasing efforts to smooth relations with China, their spat over Taiwan, raises fears of a breakdown in economic ties.
For the latest, let's bring in our Chief North Asia correspondent, Stephen Engel. So, Steve, what can be done to dial down this dispute?
I think time will heal all wounds, right? To use a cliche. We've seen that in 2012, of course, when the anti-Japan sentiment in China was stirred up. But keep in mind as well, and we'll talk about the economic and commercial impact in just a minute, the Chinese impact on the Japanese economy is far greater than it was in 2012 today. So they have a few more levers as well, like China found with the U.S. in the trade war. They're finding as well that they perhaps have more levers with Japan if they want to influence some of the diplomatic efforts from Tokyo. But so far, Tokyo has essentially reasserted that Takaichi-san, in her comments, the controversial comments about Taiwan, she was just reiterating a number of different scenarios, and one of them being any military crisis in Taiwan could potentially trigger a survival-threatening situation, which the Chinese have said that essentially gives legal precedence for Japan to essentially send in troops if it needs to. So again, it's kind of snowballed. Japan hasn't backed off necessarily, other than to reiterate that she was going through these different scenarios. And again, one analyst we've spoken to said the nationalistic tone from Takaichi-san sort of feeds her machine, if you will, in the sense that in some surveys she has 80%, upwards of 80% approval ratings in Japan right now. So Japan, yes, trying to up the diplomatic efforts to smooth over this situation, but they're not necessarily backing down. And China also figuring out which levers are going to work the most. And state media has been absolutely hammering Japan as well. The latest one yesterday saying, state media saying that her comments, Takaichi-san, sound a stark warning that Japan's militaristic demons are being summoned again. So that's where it boils down to. Time will help, but we have to just see what kind of economic impact will be the end result, and hopefully no violence.
Yeah. But as you said, this is time, right? I mean, this is your early innings of this dispute, and we've seen this in the past. So what are we seeing in terms of that commercial impact so far? And given the lessons from the past, what could we expect?
Yeah, you saw a knee-jerk reaction in the markets, of course, on some retail stocks in Japan and some of the travel stocks. So the normal suspects here would be ANA and Japan Airlines down Monday and Tuesday. But shopping malls like Isetan, Mitsukoshi down about 12% over the last couple of sessions. So you're seeing that kind of knee-jerk reaction. But we're seeing a little bit of muted response in the early going this morning as well. So again, there's going to be impact in places in the more near term, in like Hokkaido, because I checked this morning, the lifts start operating November 29th in Hirafu, in Niseko, and 1 in 4 tourists so far this year to Japan are mainland Chinese. Okay, so you have to see if those 2 tour groups that are state-owned that have canceled trips to Japan so far can spread to the broader individual traveler, because right now only 11 or 12% of Chinese tourists to Japan are booking through group tours. That used to be 43% about 10 years ago. So more individual travelers, are they going to be swayed by those efforts to cancel tour groups is yet to be seen. We'll know more in a couple of weeks.
Yeah, and as we speaking, of course, we're also cognizant of that meeting between Japanese and Chinese diplomats, and they do seem on the Chinese side to not be very pleased with the outcome of whatever chat they've been having. Steve, thanks for running us through these nuances. Great to get context from you, Chief North Asia correspondent Stephen Engel. Now, of course, we've also been seeing this risk-off in markets. What's interesting is there seems to be a bit of a floor when it comes to Asia stocks, although the Kospi is back down again. Where does this leave cryptos? We are seeing crypto shares that, of course, have been coming under immense pressure the past couple of sessions. Also in lockstep with the moves in crypto overnight, although there seems to be a bit of a floor when it comes to Bitcoin. 92K is where we still are. We have more ahead on the Asia trade. This is Bloomberg.
The European Union's top diplomat says the bloc's deep economic ties to China are holding back its ability to pressure Beijing over the war in Ukraine.
Kallas also told us that Moscow's aggression against the bloc, including an explosion in Poland over the weekend, should be considered terrorism.
These sabotage acts that they are organizing on our territories in different countries, these are extremely serious. And I would quote a good friend, Secretary General of NATO, Mark Rutte, who said that why are we saying, hybrid attacks, which seems like, something soft when we should call them by its name, which is state-sponsored terrorism.
One other issue you touched on then, when you were talking about the shadow fleets, was these other countries enabling Russia in some ways. I mean, you've spoken before about China. How concerned are you about China's role in the Russia-Ukraine conflict, and what would you call on Beijing to do? Do you think they're being responsible global actors here?
I would use the wording of NATO that says that Russia, like China, is the key enabler of Russia's war in Ukraine, which means that if they wouldn't support them, then this war would be already over because, all the sanctions, they don't have access to capital, they don't have access to, different things that are under sanctions unless they have, friends who are helping them. What we have been calling, China, who says that they want good relations with the European Union. We have been always raising this, that this is, we have two big concerns. One is their support to Russia in this war, and the second one is their economic coercive practices against our companies. Now, what my feeling is that China is listening to us, taking note that we are raising these issues, but as we are maybe not united how we should react on this, because countries have different relations, then we are not taken seriously enough. And if you take the numbers, regarding China, over 50% of world's chemicals come from China. Critical raw materials. We just saw the weaponization of the access to critical raw materials, electric batteries, electric vehicles. The list is long. All of the countries, United States, UK, European Union, Australia, Canada, Mexico, India, Japan, South Korea, all struggling with the same issues. Now, the problem is that we are not acting united here. If we would have economic Article 5 alliance that, if these coercive practices are used against one, then all the others take the front that this is not okay. But and also on the European level, that we are united in this. But, of course, China is quite clever in, divide and conquer type of, relations that, still countries think that we can negotiate better terms. But actually, the honest truth is that we are strong when we are acting together, and then we are also taken seriously. If we say these things, we act as a geopolitical power. If you don't, take steps to mitigate our worries, then we also have a strong response.
The EU's top diplomat Kallas speaking with Bloomberg's Brussels bureau chief Suzanne Lynch-Force. And of course, we've been tracking what's coming out of this forum with these opening remarks coming through from Michael Bloomberg at the 2025 New Economy Forum right here in the Lion City, Shery.
Yeah, we'll bring you the latest as we get all of these comments from high-profile guests that we have at the moment. Thriving in an age of extremes is the topic, and you're right now watching Michael Bloomberg, the founder, majority owner of Bloomberg LP, and giving his introductory remarks to a large public that will be discussing everything from the highest U.S. tariff wall since the 1940s to the U.S.-China tech rivalry and, of course, the artificial intelligence exuberance. We have more ahead here from the Bloomberg New Economy Forum 2025. This is Bloomberg. Microsoft and Nvidia are committing to invest up to a combined $15 billion in Anthropic. This move would tie the AI developer closer to two of the biggest backers for its rival OpenAI. Investors have grown increasingly concerned about the so-called circular AI deals, with some worrying they are a clear sign of a bubble.
But some also see the structural build-out in AI amid this immense opportunity as a trend that is solid, that is intact. Invisible Technologies is a software company that's focused on data labeling, and its technology is best known for being deployed in training OpenAI's ChatGPT. We have with us now Matthew Fitzpatrick, CEO at Invisible Technologies, the speaker here at the Bloomberg New Economy Forum. Welcome.
Thank you for having me.
To Singapore. Great to see you. So we've been talking about circular deals. There's concern about how investments have been plowing through the AI ecosystem, and talk of froth, a bubble. What are you seeing in terms of demand?
Yeah, so it's interesting. I think if you ask the question of a bubble, you can think about it two ways: the technology itself or valuations. And I think they are separate questions. I think if you look at the technology itself, there's no doubt over the last 4 years we've seen an absolute step change in model performance, the usage of those models in a lot of different areas. So I think the technology paradigm shift is very real. You then get to the question of valuations. And I think that's actually a more complicated question. You can definitely say valuations are high, but I'll just give you a couple stats that I think about a lot. You have basically the big tech companies whose earnings are very material. So it's hard to argue that in their cases it's a bubble given that performance. And then if you actually look at the AI space, it's something like 3 companies are 30% of the total funding.
Yeah.
And about 100 companies are 70% of the total funding. So what you really have here is about 100 private companies with a lot more demand than capital access at the moment. And none of them really are public. And I think that is the interesting thing. This is not a retail dynamic. This is not a situation where, I mean, an interesting fact I saw the other day is that public software multiples today are 1/2 what they were in 2021 today. And actually, if you look at the number of IPOs, it's still only about 2/3 of what it was, or actually 1/3 of what it was in 2021. So it's not a public markets dynamic. I think what you have is capital scarcity around a smaller number of AI companies.
Now, for you, I mean, you've managed to raise, what, 100 million back in September, and now you're telling me more than 200 million?
130, yeah. We did get, after that, we had a lot more interest in, so we actually did it upsides.
What are you doing with that capital?
We are investing all of it in our core technology software platforms. So I think, if you think about the history of our business, we've trained all the large language models. We're involved in statistical testing and what's called reinforced learning human feedback, where you basically test and validate the large language models. What we found is that cycle is where the enterprise is going over the next 10 years. So if you're a big enterprise company and you're looking to deploy a model, let's say for credit memo generation, let's say you have a bunch of credits and you want to generate 10-page documents to do reviews of those credits. You need to do all the same stuff that we've been doing kind of at the model builders over the last couple of years, where you create a rubric for does the output look good, you score it, you test it, you train it. And so a lot of our capital now is going to enterprise focus and training all these similar models.
How difficult is that to have the adoption at the enterprise level, and how does it differ from consumers?
It is difficult, and I think this is actually, and you asked about the question of a bubble. If you look at actually the uptake so far, so KPMG had this report, interestingly, that 60% of people worldwide, I think it's across a panel of 80 countries, use GenAI once a month. So you have enormous adoption on the consumer side. On the flip side, on the enterprise side, MIT released a study that 5% of AI projects make it to production right now. And it's hard. I think you need to have clean data. You need to have testing and validation. You need to know that, I always give the answer, if you had to generate 1,000 memos and you had to bet, your annual bonus that those memos would be right, how would you know? How would you train that? How would you test it? How would you get comfortable that these memos are right? And I think that's really the journey of the enterprise is looking for extreme precision and kind of human equivalence in output. And I think that's harder than people expected.
When it comes to data, this idea of rubbish in, rubbish out, right? Yeah. So the cleanliness, to your point, is important. But what do you see in terms of the scale of the market in data labeling? I think some estimates put it at 2 billion last year, quadrupling by 2030. And how will your company play in that ecosystem?
Yeah, I would say we're in the first inning of that. I think if you extrapolate what I just said to the enterprise, you actually have all of the big enterprise companies over the next 10 years as they start to label things like contact center conversations or video image data. Basically, the enterprise has barely started in the context of kind of data cleanliness. The other thing I'd say is we're talking about unstructured data in the context you just brought up, but a lot of the pain for the enterprise has actually been structured data as well. So like if you think about, I have 12 ERP systems, a CRM system, I have this huge fragmented landscape of data that underpins my AI, and I've got to get that all organized before I can do any AI. My favorite joke is that when good AI meets bad data, the data usually wins, and I think that is the story.
When it comes to enterprise segments, where do you see the most opportunity?
It's an interesting question. So I think the investment so far in the enterprise has predominantly been in the sectors you'd expect. So financial services and healthcare. They tend to have the largest technology organizations, so they've put the most capital into it so far. But there are a lot of really interesting spaces where we are seeing a lot of opportunity. To give you a few examples, agriculture. So we think about, if you think about crop yields and herd safety and all the different dynamics of, there's a lot of things you can do with video and image data in agriculture, for example. I actually look at some of the areas we've played in. So Swiss Gear, like Swiss Army, the luggages, we've done a lot of analytics for them around inventory forecasting. So most consumer goods companies, for example, are still pretty basic in the information they bring together, and we saw a lot of opportunity there. My favorite one is sports. So I actually think everyone loves sports. If you think about the potential to look at the spatial movement patterns of players and who you might want to draft, we did that for the Charlotte Hornets. That's been another big area.
Super quickly, how do you differentiate with competitors, scale, Surge AI?
Yeah, I think, look, there's kind of 3 to 4 of us or so that have done this for the last 5 years in the AI training space with model builders. I think the difference for us is that's really only half or a third of our business. A lot of what we're doing also is on the enterprise side. I think we are a tech-centric platform, and I think on the enterprise side where we serve, I think, 8 different sectors now. I think that's a pretty different part of our business than the rest of those players.
Matthew Fitzpatrick, good to have you with us here at the New Economy Forum. He's the CEO at Invisible Technologies. We do have plenty of other big names coming up for you today. Take a look at this list and the lineup of these exclusive conversations. And of course, you can watch it all live. TLIV Go is your function for terminal users.
And subscribers can flip to the terminal for that very glimpse of the events, the conversations that are taking place right here. Of course, AI is really front and center, but also this geostrategic priorities and how that has been evolving, the rivalry between the US and China as well. More ahead, this is Bloomberg.
We've seen risk assets be repriced. In my sense, this is a healthy correction, not something that's turning into a bear market.
Bob Diamond, founding partner and CEO at Atlas Merchant Capital. And of course, he thinks this is a healthy correction that we're seeing. Some of that froth in the market that is related to AI and some of these plays in the build out of the infrastructure for the, front runner of this technology is what is supporting the market. And on the way down, this is what we're seeing. The Nikkei, the Kospi, we started off looking a bit flat, but we're extending on losses on the South Korean Korean benchmark. Australia looking a bit flat for the moment. AI, I think, is really shaping our conversations at this event.
Yeah, so we're watching all of those tech stocks and the Nikkei leading those losses and really prompting that conversation on sell Japan is a new trade apparently, because we're seeing even the Japanese yen weakening despite the fact that we would expect to see some safe haven flows into the Japanese currency. The Kospi also down more than 2%. Not surprising given how tech heavy they are. The ASX 200 holding steady at a time when we're having all of these conversations about uncertainties, not only because of artificial intelligence exuberance, but also the geopolitical landscape, right? Right now, at the New Economy Forum, we're having a conversation with Vivian Balakrishnan. He's a foreign affairs minister here in Singapore. And of course, he has a view of how small and open economies navigate big geopolitical storms, especially when it comes to the U.S.-China tech rivalry. And of course, artificial intelligence also being at the center and the hottest topic right now in the build-up between China and the United States. The China Show co-anchor Yvonne Man is with us. Good to see you again.
Good to see you again.
I think we're meeting too often.
No, never too often.
Never too often. We were back at APEC in, where was it? Gyeongju, South Korea. I'm
just
losing
about
track.
less than a month ago, right?
And it's surprising because we're talking about this fragmentation in the global economy. And it's sort of still the topic of conversation. And the most important thing right now happening at the New Economy Forum, also centered around the tech rivalry as well.
Yeah, and we talked about that truce that was at least stabilizes tensions between U.S. and China after Gyeongju. It's been a couple of weeks now. I think people have talked about how fragile this truce can be, right? When you look at the flare-ups that we've seen that we really didn't expect, even when it comes to Japan and China, for example, does that impact in any way China's relationship with the U.S. if things continue to flare up? That's really one question we're going to be asking APCO. The chairman there, James McGregor, is going to be joining us here during the show to talk about he just came back from a month-long trip out of China to see what sentiment is like on the ground here right now, right? In terms of rare earths and those licenses, how smoothly are these sort of licenses being approved? And are we seeing that among businesses and the sentiment improving since Gyeongju? Certainly we'll see if that plays out here. We're going to talk about the whole Japan issue too as well, and how far China really wants to go in this whole spat with Tokyo here right now, given this fragile truce with the U.S. We're going to talk a little more about e-commerce, right? We have a very interesting company called Daosher. It's called Red Bean in Chinese. So they're a company that talks about, that really helps the merchants here when it comes to financing needs with cross-border e-commerce. So obviously they might be seeing this kind of firsthand, what tariffs and the impact it's going to have on some of these merchants as well.
Yeah, tariffs really shaping the global trading order. But to your point about how long this U.S.-China détente might last and how far China might want to take things, not just with the U.S., but also with Japan, there is a sense that maybe this time around is a bit different given the nationalistic sentiment we are seeing on the mainland. Is this a difference that we're seeing compared to past episodes, especially when the U.S. and China are going toe-to-toe? And we are seeing from this panel right here at the event, right, the Singapore foreign minister, as we know, this is a city-state that really punches above its weight when it comes to diplomacy and, its outreach in the global economy. It's very export-reliant. He's saying that the world is experiencing a geopolitical climate change. But on top of that, I mean, Yvonne, we have been talking about AI, right? That's really been shaping the conversations as well.
Yeah, we have a very interesting guest, Digital Bridge CEO Mark Ganzi. He's flown in from the U.S. I mean, they are a firm that basically invests in digital infrastructure. So everything you think about when it comes to data centers, fiber optics, edge infrastructure, which we're going to ask him what that really is. But really, the amount of money that's been thrown into kind of building these data centers is certainly one thing we're going to ask him about, right? Has he seen any sort of pullback, given what we've been seeing, these wobbles and questions about AI euphoria? Does it actually impact the whole digital infrastructure sort of side of things?
Yeah, the infrastructure build out, of course, we have talked today, the top story, Microsoft and Nvidia investing, $15 billion in Anthropic buying from Microsoft and also using Nvidia chips. This idea idea of circular deals, money just going back and forth between all of these hyperscalers and startups as well, really leading to a little bit of anxiety in the global markets right now, whether all of this will pay off, right?
Yeah. And whether there's still the constraints, right? Whether all this amount of money that's going to CapEx, is it really going to lead to some sort of return, right? That's still the question in the market here right now. And then you have the power constraints, right? You talk about how much money you're building in terms of these hyperscalers and the trillions of dollars that they're throwing into it. Is there going to be the energy infrastructure there in place to power this whole AI revolution, right? And I think that's where China has a big role in that. We talk about how there's this rotation from the hyperscalers and really kind of the hardware side of things into the power grid, the cooling side of things. Those are some of the things that China still might have an advantage of when it comes to this whole AI fight.
Yeah, I mean, this idea that the energy demand is going to be immense amid the AI infrastructure build out, can it also be done sustainably? I think is another key question that will be asked at this event. Yvonne, we got to leave it there, but it's been great to have you on the set with us. It's a prelude to what's to come for the days ahead. Yvonne Mann, our China Show co-anchor with us. Let's look back into this panel that is taking place at this very event where the Singapore Foreign Minister Dr. Vivian Balakrishnan is speaking.
An imperfect but important agreement. Today, if the two main players are not in the same room, and it goes further than that. In fact, it's not just a matter of picking up your marbles and leaving the game, but you're actually disrupting the game. And my worry is that we're going to be unable to deal with the global commons. It means climate change, pandemics, the challenges from AI. We won't be able to respond adequately to it because the two key players either are disrupting actively or are spoiling for a fight and are certainly not willing to restrain themselves with multilateral rules imposed by Lilliputian countries, big and medium and small elsewhere. I hope that's not too depressing.
Well, but so as far as you're concerned, because what I was saying at the beginning was that it just seems a muddier picture than the decoupling this Team US.
No, it's messy. My point is that it's messy, but try to understand what's.
But as far as you're concerned, the long-term trend.
Yes.
I mean, someone has likened it to a couple saying, we're going to divorce in 10 years, but we have to live together before then. You still think the long-term trend is decoupling between the US and China?
I think without strategic trust, the logic for decoupling, at least partially, in the name of national security and anxiety over competitiveness, will continue to play out. And that's what we're witnessing. But if I can come back to where you started with a piece of good news. You said, why hasn't the rest of the world retaliated? I think a couple of reasons. Number one, they're a far bigger elephant or eagle than the rest of us. So what's the point of retaliating when, in fact, the little guy will be the ultimate loser? So that's the first thing. Second, and I'm coming to your good news. If you leave aside the two big powers, and if you open a world atlas and draw a diagonal, Europe, the Middle East, South Asia, Southeast Asia, Australia, and New Zealand, and then you draw two spokes, one to Northeast Asia, particularly Japan and Korea, and another spoke southwest to Africa and South America. Guess what? In fact, there is still a majority of countries, and even I would say the majority of global GDP, that still wants to operate on supply chain efficiencies, on economic integration, on rules-based globalization. The only thing is the enforcer in chief is no longer there. And there is a need, therefore, to assemble a coalition of the willing. So what you're watching now, all that scurrying around by medium and small economies, is to keep globalization alive, reform what needs to be reformed, and there's a lot that needs reform, but to work together in a more collegiate way, knowing full well that the underwriter, the enforcer, is not going to be doing the heavy lifting. So that's where I think there is a glimmer of hope. And that's why, my Prime Minister and I have been scurrying around to regional and international conferences. And the good news, I agree with you. The majority of people, in fact...
Yeah, you were listening to the Foreign Affairs Minister of Singapore talking about the geopolitical tensions and warning of the weaponization of critical minerals as we continue to watch the U.S.-China tech rivalry and the change in the trade landscape. He's talking about the decoupling of these two economies in the long term. We're also watching some of the risks in the markets. A sell-off in longer-dated JGBs continues, traders fretting over the prospect of a larger-than-expected supplementary budget by Prime Minister Sanae Takaichi. We are seeing the 30-year yield also reaching record highs.
Yeah, and today we have a 20-year auction to watch. The long end has really been coming under pressure of late, given the fiscal worries facing Japan. Our chief Asia FX and rates correspondent, Rout Carson, joins us now. So, Rout, this auction, debt sale coming up. The past couple of ones have been tricky. How are investors expected to react to the one today?
I think this sell Japan trade definitely has legs to go, and that goes for stocks all the way through to the yen and JGBs. You're absolutely right. We do have a very highly watched auction coming up for the 20-year, and we all know that ultra long debt has been under pressure, not just in Japan, but around the world. But when we look at the Asian time zone, when Tokyo comes on, there's definitely a lot of attention as to just how these bonds will perform. Now, remember, it was just yesterday that we saw the 40-year yields, touching records again. Not exactly a record you want to smash on a daily basis, but it sometimes feels that way, doesn't it? And again, the 20-year auction, another litmus test as to whether or not bond vigilantes are at the wings or, in fact, at the heart of what's happening in Japan bonds right now.
And also anxiety over the ongoing diplomatic dispute between Japan and China as well. Just less than a month into office for Prime Minister Takaichi, a big test. The market's not liking this.
Absolutely not. The last thing that investors want is more geopolitical tension. Now, it's important to remember that up until just a few years ago, that for decades, Japan has always been seen as very much a haven. The yen was always bid during times of stress. JGBs were seen as an anchor to global debt markets. And right now, even with the spat that we're seeing playing out less than a month into Takaichi's leadership, the yen is flat or even weaker on the day. JGBs are selling off. Again, it comes back down to what exactly is happening in Japan. Are investors, in fact, losing quite a bit of confidence? And where does the buck stop? Or in this case, where does the yen stop here with the losses? Takaichi certainly isn't helping with the sentiment when it comes to the China headlines.
Yeah, Rout, I think the yen this year really can't catch a break, and we're looking at the lines in the sand, right, for Japanese financial authorities, and maybe when they pull the trigger when it comes to intervention. That's something we're watching as well. Rout, thank you so much. Our chief correspondent for FX and rates in Asia, Rout Carson, with us there. Now let's cross back, and we are looking at these live pictures of this panel still ongoing with the Singapore Foreign Minister. We have more heads on the Asia trade. This is Bloomberg. Now, as we watch the sell-off deepen in Asia, we are also taking stock as earnings scorecards continue coming out from some of these Chinese tech-related names, including Xiaomi. Of course, it's a player in the EV business now, and it reported quarterly profit for its EV business for the first time. And of course, this is a major milestone for the smartphone makers' foray into what's been a really crowded market. But of course, this is all coming at a time where, Chinese authorities are pushing forward anti-involution policies to try and take out some of the unnecessary competition. But we've seen these EV makers, right? They've been competing in other ways, including offering other sorts of, benefits for buyers of EVs. Let's get more on the outlook for China's EV sector. Joining us now from Hong Kong is Yuqian, head of China Auto Research at HSBC Global Research. Yuqian, great to see you. So talk to us first about what we've been seeing so far from the EV makers and their profits.
Yeah, sure. We are gradually getting the third quarter result print, but I would say the market key focus is next year, 2026. Why is that? Because now we're sitting on the fourth quarter cyclicality peak, because the EV subsidy is scheduled to phase out by the end of the year, and also the purchase tax exemption also scheduled to halve for EV starting the beginning from next year. So we're going to see the demand pulling forward into fourth quarter from next year. So we're likely to see fourth quarter this year stay strong, supported by the front-loading sales and followed by a potential demand cliff in the first quarter. So that's the cyclicality we already know. So the market focus has been shifting towards the 2026 outlook and what's coming for all the OEMs in that sense.
What is your sense of market leadership as this intense competition continues? We know how the likes of BYD, for example, they're trying to stay on top of their game. Does that in a way affect the way these EV makers look overseas for opportunities?
Yeah, sure. So I would say, speaking on BYD, they are about to launch their next generation, potentially EV platform in the first quarter next year. And also they are doing sustaining strong in the overseas markets. They're probably running around 800K to 900K unit in overseas volume this year. And their target to their target 1.6 million, a near doubling of a not very low base. So I would say overseas business provide more favorable pricing environment given the competition. BYD is more, the product strength is more standing out in the overseas market. That's going to continue to be a strong pillar. And also domestically, given the new platform they're going to push in the fourth quarter, followed by a potential portfolio refresh, that would also position the leaders to reclaim part of the domestic market share back.
It's interesting that you say in your notes that you prefer suppliers over OEMs. Why do you think that they will weather this cliff at the end of the year and into the contraction next year better?
Yeah, sure. We do prefer suppliers given the earnings resilience. We talked about the OEMs, the car makers in general are going to sell through the fourth quarter peak and the first quarter next year demand cliff. So the cyclicality is higher for the OEMs in general. For suppliers, especially selective supplier taking battery, for example, after 2 years trough, we do see among the battery space, the global demand coming from not just the EV, but also energy storage, but also from the truck, in addition to passenger car, has been boosting the demand stronger. And the EV battery or the overall battery space, I enjoy better growth opportunity versus the EV. And the pricing is also coming back because not too much capacity has been added in the past 2 years, while demand continued to tracking strong. So we like the whole space. We do see the battery leaders such as Cattle well positioned, but also the segment material leaders such as Ring Energy, also good position to capture the battery hyper growth opportunity.
Yuqian, aside from the strong demand, I just wanted to get your thoughts as well, because we know how the likes of Tesla, they have been accelerating this perhaps pivot away from the Chinese supply chain or Chinese suppliers. Does that affect things a bit?
So diversification of the supply chain is the OEM's job, regardless of the geopolitical tension. So I would say naturally OEM tend to diversify their supplies anyway. And of course, we do see not just the China OEM, but also China supply chain has been starting to move their production in overseas. So that could potentially mitigate the supply chain risks, singly bonded into single China market, because the China supply chain and the OEM are already started to globalize.
Yuqian Ding, head of China Auto Research at HSBC Global Research. Really good to get your take on the EV landscape across China. We do have more ahead on the Asia trade as we bring you the latest conversations from the Bloomberg New Economy Forum 2025. The Foreign Affairs Minister of Singapore speaking right now. This is Bloomberg.
We're coming to you live from the Lion City, where the 2025 Bloomberg New Economy Forum is taking place. And we've just been hearing some of the views from Singapore's Foreign Minister, Vivian Balakrishnan. He says, though, there is a bit of actual good news despite these diplomatic tensions between the US and China and their rivalry. Does this present a sort of opportunity for smaller states and the Southeast Asian economies as well?
Especially given that intra-Asia trade has become more active, it's become freer, right? That's a part of the story that we can't forget in this broader narrative of US-China competition. This is one of the topics that I'll be discussing with my panelists later today. In about half an hour time, we do have the trade's new realities conversation. And one of those topics will be the regional exuberance that we're seeing, more conversations happening on the sidelines and the build out of these alliances and new partnerships, as well as we continue to see this fragmentation in the world.
And especially against the backdrop of what this means for supply chains. When it comes to tech rivalry, it's also about rare earths. And don't forget that when Trump visited the region recently, a lot of it had to do with securing critical minerals that are going to be crucial for this AI infrastructure build-out.
Interestingly, on my panel, I have the Rwandan trade minister. And Rwanda, for example, is a country that supplies a lot of these critical minerals, including tungsten, including gold, including other parts of the broader materials ecosystem that's needed for these high-tech products. So we'll be asking him what this means, this rivalry between the U.S. and China, for his country and the opportunities that that presents.
Yep, and we will be continuing these conversations at this very event in an era of shifting geopolitical priorities and how AI is really shaping some of these economies. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade as well in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.